Today, I'd like to discuss the large-scale economic measures recently announced by the Chinese Communist Party, which have been anticipated since around September. We'll explore the background of these economic measures, their effects, and the market's reaction. First, please take a look at this chart of the Shanghai Composite Index. This index broadly aligns with the movements of Chinese stock ETFs, so by observing it, you can understand how Chinese stocks have been performing. Starting from the point indicated by the arrow, stock prices have surged dramatically. This surge occurred because multiple media outlets reported that China was going to announce substantial economic stimulus measures. Until then, stock prices had been gradually declining, reflecting the belief that the Chinese economy was in serious trouble. With the situation looking bleak, speculation arose that the Communist Party would implement unprecedented economic measures. Major media outlets began reporting that such large-scale economic measures might be enacted, leading to significant speculation. Consequently, stock prices skyrocketed from around 2,700 to nearly 3,700, a remarkable and abnormal increase. However, after reaching its peak on October 8, the market experienced a sharp crash. I have created a previous video explaining this crash in detail, but briefly, the crash was triggered on October 8 when Chinese authorities held a press conference to unveil the details of the economic stimulus. Although expectations were high, the press conference failed to present concrete plans, which shattered market expectations and caused stock prices to plummet. In that video, I cover the interactions between reporters and officials, where the vague responses from authorities undermined market confidence, leading to a significant drop in stock prices. At that time, many individual investors in China had taken on debt to buy stocks, leading to chaotic market conditions as ordinary Chinese investors were caught holding stocks at high prices. With investors waiting for specific measures, stock prices stagnated, fluctuating without clear direction. However, in November, stock prices began to rise again. Around this period, there were various reports about whether economic measures would be discussed by the Standing Committee of the National People's Congress. Just before the session, news broke that specific economic measures would be on the agenda, which led to a decline in stock prices. On that day, Chinese authorities announced a 10 trillion yuan economic stimulus aimed at reducing local governments' so-called hidden debt. I will explain what hidden debt entails shortly. Although 10 trillion yuan, approximately 211 trillion yen, seems like an enormous amount, the stock market did not react positively, indicating that the stimulus did not meet expectations. The Chinese stock ETFs mirrored this movement, suggesting that stocks had been bought on speculation but were being sold once the actual measures were announced. Despite announcing economic measures exceeding 200 trillion yen, the market reaction was one of disappointment, reflecting the sentiment that even such a large stimulus was insufficient. This indicates that despite the substantial amount, the measures were perceived as ineffective. First, let's discuss why addressing local governments' hidden debt is important and clarify what hidden debt actually is. Hidden debt encompasses various obligations that are not included in the official debt figures reported by local governments. To understand hidden debt, it's easier to think of it as all debts beyond the officially reported ones. Local governments in China have two legal methods for raising funds: general bonds and special purpose bonds. Each local government reports detailed figures for these, such as the remaining balance of general bonds and special purpose bonds for specific regions like Shanghai. These are considered legitimate debts, while any other debts fall under the category of hidden debt. So, what exactly constitutes hidden debt? Currently, it's similar to what is known in Japanese as shatosa. For example, when building a large bridge, a special entity is created to manage the project. This entity borrows money to build the bridge or other infrastructure projects. The reason for creating a separate entity is that local governments have debt ceilings, limiting how much they can borrow directly. By forming a separate entity, they can undertake infrastructure projects without directly increasing the government's debt. However, these projects, such as bridge construction or road development, typically do not generate sufficient revenue to recover the investments directly. Even if tolls are charged for bridge usage, economic benefits may be minimal due to detours and lack of substantial traffic, meaning the projects are not profitable. As a result, these debts are not recorded in the official debt balances because they are managed by separate entities, but they are implicitly guaranteed by the local governments. This means that while the projects themselves are not profitable, the government stands behind the loans, making them effectively part of the government's liabilities without being officially reported. Additionally, local governments may defer payments for various expenses, such as constructing government buildings or maintaining electrical systems, which adds to the hidden debt. In some cases, Governments use advanced payment schemes for civil servants' salaries, where banks pay the wages on behalf of the government, creating further debt that local governments must repay but often fail to, leading to accumulating liabilities. Moreover, some regions engage in practices akin to Ponzi schemes. For instance, the government might launch a project promising a 6% annual return by renovating unsold real estate into rental properties. Given the current economic conditions in China, such high returns are rare and potentially unsustainable. The government might promise to guarantee these returns, encouraging investors to fund the projects despite their questionable feasibility. This approach spreads across China, exacerbating the financial strain on local governments. Local officials often prioritize immediate stability, approving projects despite knowing their long-term consequences will burden future administrators. This short-term thinking has significantly contributed to the ballooning hidden debt across China. Official reports estimate hidden debt at around 14.3 trillion yuan, but Chinese economists believe it may be closer to 57 trillion yuan based on available data. Beijing might not even be fully aware of the total amount, suggesting that 57 trillion yuan could be a conservative estimate. In the current stimulus package, approximately 14.3 trillion yuan, nearly 300 trillion yen, has been allocated to reduce hidden debt to around 2.3 trillion yuan by 2028. However, the issuance of 10 trillion yuan in new bonds is unlikely to be sufficient, as the actual hidden debt far exceeds this amount. Consequently, the stimulus measures will likely only provide minor relief by slightly easing interest payments, doing little to revive the economy. Economic observers recognize this limited impact, which is reflected in the tepid market response. Looking ahead, the key point of interest is whether China will introduce more aggressive economic stimulus measures to boost its economy. Currently, China is waiting to see how the United States, under the Trump administration, will respond. Trump has threatened to increase tariffs on China, which could further harm the Chinese economy. If this happens, there may be negotiations between the Trump and Biden administrations, potentially involving issues like North Korea or trade disputes, leading China to seek some relief or easing of economic pressures. Until the U.S. stance becomes clear, China is uncertain about its next steps. If nothing changes, China's economy is likely to continue deteriorating. The recent announcement of a 2.1 trillion yen economic stimulus might seem impressive to the Japanese public, but in reality, it's insufficient given the severity of the existing problems. The measures are more symbolic than effective, akin to trying to cool a burning stone with water. Therefore, future economic measures and their scale will be the next focal points. Observers will watch to see if China introduces more substantial and impactful stimulus packages to truly invigorate its economy. That's all for today's discussion. Let's meet again in the next video.